Hello, hello, good morning. Welcome to another ES Futures Trading stream. Today is Monday, March 18. It is 9:24 a.m. I am a little bit late, or quite a bit late today. Um, I have some things to do. I don't think I'm going to be too much, that long today also. Um, we're coming to this market with a new contract. March is out of the way. March is out of the way. There's no more. We have only one contract here. Let's see. I thought that maybe Friday was going to give us some, was going to give us a glimpse of what this market can be. The closing actually was a really nice rotational day on Friday. There wasn't nothing weird on Friday. It was a really nice rotational day, selling rallies, buying deep, sell, buy, sell, buy. It was really nice. It does, we don't have an excess on the low. This is a poor low. We didn't have, this selling that come at close. There's something that happened at the close. If you were present in the market, and this is just for there was a lot of absorption that happened here in when the market tried to break. It just didn't have it. There was a lot of selling, but it didn't have that much extension. Even so much that even this long inventory was partially corrected. There was a rebalancing at the closing. For the amount of trading that happened here, there was not much liquidation at close, and it leaves this excess, non-excess high here and non-excess down here. Now we have a gap. We have a significant gap. Trade guidelines is go with the gap that is not filled rather quickly on fade a gap that fills, right? On Friday also the market opened with a gap, with a downside gap, and that the gap was filled. Was it filled right away? It was filled, right? It was filled right away, but value didn't move higher. All right, there was an attempt. It didn't even get inside the value area of the previous day, and there was a lot of trading, below. So we have value lower on Friday. That's what the most important thing to me. Value lower on Friday. Did not have acceptance, didn't even get inside. And now we're back to normal, right? Bad traders are buying the dips. Notice what happened here. Also, something really interesting from Friday. Let me check if I got this screenshot here. I have this thing. This is just before 5 p.m. There's tremendous amount of contracts here, and all of them to the downside, and that's why I have these ones marked here as these arrows here. And the market never dare to trade below these ones, even though these ones are to the downside. Now, it will be for me very interesting to see what happens if the market can come back to this area here, which happens to be BOC yesterday, BOC Friday. Now, what do we have? Tomorrow, we have on Wednesday, we have FOMC. And this is something that all happens all the time, right? Markets breaks just before the date, or it can be a rally as well. It can be a rally before an important scheduled event, as FOMC, for example, in this case. And the next thing the market is, just do the opposite, right? It trades to the opposite side. If this market were up high, probably today we will have a gap, this much gap, but to the opposite side. It happens all the time. I'm not saying that I knew this was going to happen. I'm not saying that, But the odds that something like that happens are always there, and to me are high, especially before these days. Now, the market is open. I didn't have the chance to check. The other markets, but we have a significant gap. What about volume? How much volume? Not that much, about 208, 200, almost 200, or less than 200. This market is very emotional here. What happened this day? This firecracker effect that wasn't resolved this day. I guess Yaya was talking. Hey Yaya, if you are here, man, this is what you were watching. Now, your observations were right, but the thing is, the things that you observe, that you notice, not always have to be repaired or correct or resolved that day. That's very important. We need to carry this information for down, for we don't know for how long. But we have to keep this information in hand. Okay. All right. Okay, we have a significant gap here.
Order filled.
Uh-oh, what's happened here? This market now is trading inside Thursday single prints. Now these stops have been taken. Now we are in the single prints here. There's no excess here, and the all-time high is really close, really close. Have you noticed when, the market usually gives us some opportunities, maybe 2 or 3 a day. Well, the thing is, we never know when the opportunities are going to come. As an example, Friday, do we have Friday? Thursday, we have an opportunity at the close. Wednesday, it was at the opening. And Friday was, we have kind of like small opportunities throughout the day, right? Because it was a rotational day. But we never know when and we are going to have one. Never know. Now we have a significant gap, quite a gap here. No? Just to make things different, right? We are trading high. I want to see if this market can take this, can make a new high today. It's not that far. Notice where the market settled, right the center, kind of like right the center of Friday's range, and now we are way up here. Very narrow overnight session. The market didn't care about the overnight inventory here. I'm trying to figure out what is going on here. I got a lot of things to do today. Apologizing in advance if I am not fully invested in the day. Oh, let's check how volume is. What kind of volume do we have today? Yeah, not bad. I'm not going to compare to Friday, maybe to Thursday. It's going to be lower than Friday. Up to Thursday, volume was increasing. Okay. Gold. This is gold. This market is very dangerous. It can go in either direction here. When we trade between this high and this low here, but this can be, there's potential for a sequential trade here. While these lows are taking, the market is just going to come back to take these stops here, and making new highs. Oil is rising. Bond market, this is very good questionable, brother. It's going to come back and then boom, do something like that. Which won't be for anybody here. Which will not be good, but all the markets. What is have a gap here, no excess here, no potential here, fight like effect here, fight like effect here. This is, oh boy. This market is very holding the trend. Do we have a trend line here? Remember when we were talking about these trends here? Where was the more visible one? Oh, this is Nasdaq. Oh, this one. This one. This is ES. This one here. Just extend. Let's extend this line. And just move this one around. Here, here, here. Here, here. A little bit lower, and you have, you can put it whatever you want. You can put this thing here. It's barely holding. Barely holding the trend. But it's trending. It is trending. Higher. The monthly is going higher. Weekly is going higher. It's trending higher. Every week is more and more questionable. The next, can you see what's happening here? Right? What's the next potential? This market is going to be bought on this high, 51.93. Okay, this probability is 59.93. Why I say that? Right? I don't even bother to put No, ask no questions here. Was bought from this one, was bought from this one, was bought from this. It's going to be bought on this. Sometimes it's as simple as that. Don't where's the 59.93, 51.93? The gap close, right? Close to the gap, a little bit low here. What else? How these stocks are doing? Oh, nice gap. Wow, it's a gap in Apple. Wow, look at this gap in Google, man. Look at this short squeeze here. Clearly close to make all-time highs here. Apple's really far. This is also very questionable here. Microsoft, boy, this is... No, I wouldn't... at least on these companies are really high, brother. Really high. No, Meta has broke, is breaking the trend here. This is not that much of a gap for Tesla here. Now, let's see if NVIDIA can get back inside this excess here. We have excess and make potentially new highs there. Alright, let's go back here. There's a pressure to the upside here. Nice volume coming here. Now the question is, why you want to be short in this market? Okay. This market may break 60 points, but until that happens, don't try to up from that. Right? This market is going higher. We have a gap to the upside. Value obviously is got to be higher because we have a gap, right? That's no brainer there. The first thing, or the first sign of change, actually, the change has happened, right? Because we saw what we saw here is this market going lower. Notice there is no excess here, no excess up here, no excess. This is weak, ample, this has good odds, This is very weak. It is very weak. And the market has good odds of taking if the market is too close to this high, man, the short will be really, high risk. This market has a potential to make new highs. Now, every Friday, the market had a chance to make new highs. It did. And that was something that was changing. That was changing last week. That was a nuance, right? If the market didn't make new highs, what can happen, right? What could be the thing here, the next thing? But until that happens, I'm not worried. I'm not in a hurry to do anything here. I am actually now. I have an opinion of the market. This market, the structure of the market is very weak, it's very questionable. tremendous amount of weakness, but it doesn't mean I'm going to short the market. What I'm actually looking here is to the upside. I know overnight inventory is extremely short. There's a lot of emotions. They're very emotional overnight session. There's potential here also. This is all this inventory is long. Now, in the same way as the market, took like 4 days to, come back and check this mechanical selling that we have this day. It doesn't have to happen today, right? It doesn't have to. I'm talking about natural days, not trading days, right? It doesn't have to happen today, okay? So it is something that has to be in the background. That's information that I acknowledge, and after this day is over, in the same way as I don't see now, I don't see, for example, this overnights anymore. Oh, notice these two, right? I didn't see this one, for example. That's tremendous. This is big overnight POC here, big overnight POC. Saddle was up here. And this inventory was very short in hands of, look at this. Very short in weak hands. The market didn't care. The market didn't do anything this day on Friday. But you need to remember this day for the future. This is kind of pretty much a rebalance. This is also history. That we have this. No, I was saying, in the same way as we don't see this thing now, tomorrow, oh, come on. Tomorrow, this day will be forgotten. That will be gone. There's a nice level. Oh, look at that. This is significant volume here. 10,000 is not bad here. It's really not. But there is no volume here. Nothing here. Now, if the market is going to go higher, it needs volume. The area that actually has something here. Remember, take this for the future. Is from 1875 to 1625. 1875. What? What the heck? There's something I'm missing here. Oh, my bad. Around this area here. This is not sell. My bad, this is not sell. But around this area we have we have significant amount of volume here and here. That has been taken. We are going to have low volume today relative to this day. The upper side, there's nothing here. This day there was a lot of volume here. What is this? What is wrong with my charts? There's something wrong with my charts. Oh, okay. Okay, right now. This is what I was telling you about. This area here, this is the volume here, this volume here attracts. During the day, there's nothing here because this one has taken those ones out. The next, volume wise, the next volume nodes are up there, and we have significant volume here right now. This one is from Friday. From Friday. And you're going to put those ones here as well. Kind of like around this area. Here is one. And another one kind of like around this much, this area here. Don't be that exact, right? I don't try to be that exact here. And the other one is way down here, around Settle here. Kind of like, yeah, pretty much this value area here. I'm giving the market time to settle. This is Friday. We got 10 minutes more, which will be half of this, kind of like about same as Friday. I mean Thursday, same as Thursday. I'm going to compare it to Thursday, okay? Not to Friday, because Friday is a special day. Happens every 3 months. Hey, yeah, what's up, man? Yes, brother. Yes, that's your firecracker effect that you were checking on Thursday, right? Remember that that's the information that we need to carry. Remember what happened here. I don't know if you have seen this. This overnight has very prominent PLC. Notice, right? What you can call it. You just can see right away. Right? This one, compare this one also. This has a very prominent POC too. This one, this overnight has there's nothing here. This market this is a directional market. Settle here. I am very this level here is. I'm monitoring this level here. What can happen because this day at the closing, just before 5 p.m. on Friday, there was significant amount of contracts there. I don't know if you have seen that. When I show that, let me show it again, just in case. This one, like 12,000, like 12, 15, 18, 21,000 contracts negotiated just before the closing, just before 5 p.m., just minutes, seconds before 5 p.m. When I see this kind of volume, there is something that happens always. I don't know what direction. There is something that happens, and I can see these levels down the road as either as a support or resistance, and that's why I have it marked here. I think as long as the market keeps above this area, this is going to be positive. Meaning that I'm not interested in the short as long as the market comes down below this level, which happens to be, You had a 5200 here. What is the 5200? 5200 is here. Oh, come on. Where's red? Red. No, you are not. $5,200 here. $5,200 here. Now, as soon as this level is clear, right? Meaning the market comes back inside this range, and this would be an area actually, around the 95 or maybe the 90, when you can, traders re-enter. And these areas, the 5 and 10 is when they re-enter again, but this time to the upside. As long as the market keeps above this, why I have why I have this line here, the 9. What this can mean? What is this 52.9? What is 52.9? What is this 52.9? No, there's nothing here. Nothing in the monthly. What is the weekly? I don't know, there's nothing here. I guess I was using that reference from... Never mind. This significant volume here, traders are trying to take this market higher. Actually, I don't know if it is buying or selling. I saw some pressure to the downside, but the market is way up higher. What I'm doing with those things is, in the same way, this observation, right? In the same way you will pay attention to this, right? I was also paying attention to this, right? But I saw the market doing nothing about that. Now check this out. This is something I just saw, right? Compare. Okay? Compare. I guess we were talking on Friday when the market. I guess you asked me something about going short or wondering about if this is a liquidation, right? I was trying to see if the market has a liquidation of this long inventory, but it didn't have it. We talked something about that. We were watching some absorption. The market was having absorption here. It didn't let this period to go lower, right? I was watching this based on what I saw the previous day, that they have a huge rally, huge short squeeze here, and just the opposite. It may not have something to that. It didn't. There was a lot of absorption that happened here. The liquidation pretty much ended here. There was a lot of absorption. The same thing happened here, but in the opposite side, in the opposite direction. Did you see this? This is the firecracker, or not firecracker. I wouldn't call firecracker effect, right? But having the market come back all the way up to here, it really didn't need much to take this one. This is weak. We notice where it was sold just one tick from this one, and this one, and I had the potential to come all the way up to here. Somewhere in this area, in single prints area. It didn't do it. The same thing the market failed to do here. There's a lot of absorption. There's also in this one, in this time, market just got too long here. And you can see the next day there's a reaction to this action here in the overnight. And we are having a correction on this inventory now today. This is the area that you were looking for, and that's why we carry this information forward. If this would have happened this would have taken a whole week, maybe 3, 4, 5 days. I wouldn't give that much, probably I would have let this go. But when it is just 2 days, just 2 days. And this rollover, this day, actually was quite normal. I didn't see anything crazy this time. It was a really nice. It was a nice rotational day we have on Friday. Quite normal. Nothing out of the ordinary. Today, the most important thing is the gap has not been filled. I want to see what, if, the market has taken this highs out and came to the single prints here. Now, for example, I'm not giving any weight to this profile for the overnight. I don't care. That's just too far back. Too much time has passed also to the overnight that we have there. Just a second. Now this is interesting. Coming back down to here and buying from these lows. Notice what happened here. Remember what happened here relative to the previous day and relative to the same day as well. Notice what happened here too. It's happening here again. A strong market doesn't do this. The strong market doesn't come back and buy from this one. Probably with had some pullback here. And then continues going high. But there's a lot of potential here. It has a lot here. Notice now I'm going to check as I say, I'm checking this day to Thursday, not to Friday, but to Thursday. Remember also what we talked about the volume here. It wasn't going to be a reference, right? These are change contracts, right? The last day of contracts. There's a lot of volume in the market during those days. And if you check Jim's website, I would say that today we have maybe like 20 or 30% lower volume. I wouldn't pay attention to that. That can be misleading because what he does is he compares to the previous day. Resources, new structure volume. You can see 35%. This is not. We know. We say, oh, this market is super weak because it doesn't have anything. No, it is all. Everything is relative here, right? And what's happening is comparing today's volume to Fridays. Remember, Friday happens this Friday happens every 3 months, and that's why I'm comparing to Thursday instead. Because this was a high day, maybe, and still I won't pay attention to volume today because I don't have anything to compare to. If any indication, this is an indication of low volume overnight. Here, for example, what is 187,988? 187,988. That's the volume of the overnight. And how it was 400, 300, You know, it's in the lower side compared to what was the last week. No, this is in the lower side. Now we don't have those two contracts, we have only one. I mean, we have more than one, right? But yeah, what I mean is with volume. Why I say only one? Because notice the volume June has, right? All these other contracts we have here all the way up, all the way down to September 26, but they have really low volume, right? 3,037, not that much. All right. Can you see the action? Can you see who's trading this market? More like what we may have today, if this day keeps being like this, I don't know, man. I don't know. I think we may have some sort of liquidation out of closing if this kind of action keeps happening. It keeps going high and it's being pulled back. Keeps going high and being pulled back. That's a market getting low. But that will be, I am just speculating here. That's just a speculation here. I didn't do anything here. I got a long when the market opened here. When it didn't pay attention to the overnight inventory, long inventory. I went long somewhere in here. Didn't aim. When the market kind of start to struggle, I just close it, man. I just close it there. Gaps are a form of excess, right? This gap is also signaling change because we had a market, we have downside trend here. We have a trend to the downside. We have a trend to the downside. All right. We were talking also how this market is barely holding the trend. Let me see if I can call this again. I guess Friday we were talking also about, just comparing what happened. Just let's think if this, instead of being Robosell, this is a ES chart, right? Then you can see how many times it's being bought from the gap here, from the trend. There's a trend here. You can see this trend line here as well. Trend. It's being bought from the line, and now once this is taken. Once the trend is broken, right? Sideways trading can happen here. Some rebalancing and maybe can trade back towards the trend. We can put this one here, may come back, and then assuming this is ES, this is Russell. I remember say that. The Dow, as I think the Dow is the weakest here. This late ladder buying wasn't corrected here. Now what I am watching here is the market. The Dow has broke support here. It's trading below support, below this one, but it didn't get back to this, right? It didn't get back to this. Now once see if this market takes this level back again and makes new high. Oh, if it's rejected, in this case we will have a trend to the downside. The Dow was still trending lower. This is not a firecracker effect potential here, but these highs are very questionable. Just put this one together, these four together. This is Nasdaq, and check the ES as well. The same thing that's happening in Nasdaq is happening in ES as well. Just put these four together, right? There's no excess here at the highs. The weekly and monthly are trending higher, and now the weekly is coming back, right? It's trying to resume. We will know tomorrow if we have the trend is resuming. Now this is getting very interesting here. Look how well this market has stuff here. I wouldn't short this market, but the last thing is I want to be short here. But the long side, you know, is I don't see this as a strong market. The buying, I mean, we never know that. There's no way to know that. It will depend on what traders, what people think. Right? If people think that this market can keep going higher, they will just come back and buy and buy and buy for who knows how long. Right? We never know that. Momentum. You know, momentum is something, is a force that can, you know, usually takes market way higher or lower than we ever can anticipate. That's a question. That's a good question. That's a valid question, right? But it seems. I don't know, man. It seems to me like I have a bias to the downside, okay? But it looks to me like you are trying to short. I don't know. That's the impression I have, that you are looking for a short. That's what I think here. I'm not saying that's wrong. Right? That's just an observation that I have. That I make. Discretionary trading takes a while. You know, discretionary trades take some time to develop and also to notice what we have, right? The way how I learn this, you know, this is trial and error. There's a lot of mistakes that I cannot call it mistakes, right? But experiences. When I see a trade, I used to see a trade when, oh, okay, this was the trade, right? Oh, okay, this is a gap. This is a gap and went higher. Okay, how? But I noticed that when the market's up here. So I am 15 minutes late. But right now this back here, god damn, I am 30 minutes late. How do I come, you know, how do I get closer and closer, for example, right? This could have been a good trade, you know. What is your, here we have a gap, and what is your risk here? Just being like that, what is your risk here? 2 ticks, right? It's right there, you know, because taking this low, also change the structure of the market, the structure of the day. It's not trading higher anymore, because this will set the market to the downside. Just now the market has taken this higher. You know, it is showing continuation. It is showing we have a gap, market to the upside, which is a market to the upside, which give us, you know, this M, and we tell us that this M here was just rebalancing on some of the long inventory we have here. Hey, wait a minute. But what about these things? What about these blocks here? That's the information that's going to remain there for I know how long. I don't know for how long. And this is observation. This is something that I started to watch. Okay, I don't have anything here now. I'm just watching what happens with this thing. Right? I'm just watching that. I am just observing in the same way as this thing, this market profile used to have another period, N period, which was the rolling off period. And by observation, this is the first time when I learned this. It is just observation that you make your adjustments. And this is what something Jim did. Right? He removed N. I said, why? Right? And what I did is I did the same as him. But I didn't know why. I just did it because he did it. But then later I started to watch that one too. It doesn't have too much relevance. You know, the market pays market pays more attention to these lows here, down, for example, to this. This is the run-off period, right? Down to this one, right? And also the run-off, the most of the volume is only the 15 minutes after the close. The first 15 minutes after the close, another 30 minutes. And why is the 15 minutes here? I don't know. So it's better. I'd rather just keep 14 periods wide. Oh, something from the overnight too. I didn't have a chance to do this. This is very important, believe it or not. The overnight has to the market didn't have interest even getting back to here, much less coming to close the first, all the upper distribution of the overnight. Now that's a sign. In this case, that's a sign of a stronger market, at least in the short term. We have multiple time frames here, right? Multiple time frames we have to deal with. Could you explain what's a good shape of the volume period? Sometimes I see you talking about the shape at the top or bottom of the volume period. Let's see. When we have a really nice trading going on, that's another thing, right? That's a good question. Right now, it's kind of this histogram doesn't look bad. No, we have really kind of like nice volume here. Dries, market's not interested in this area, and then you have another accumulation here, right? Sometimes, you just see craziness. Something market come like this. Really bad. There's no kind of like very crazy things going on here, and this is nice. But this is just this is just one period. It's too early. This is the accumulation of these two periods, A and B. Notice for example here that this is better. It looks nicer. Oh, come on. Accumulations, something like that, right? This one. And this is kind of like a little bit more disorganized. This is better. This is nice here. This is nice here. This area here. But those are just little things, right? I don't pay too much attention to this. It has an impact. How can I say this? For example, if I would have seen something like this, quite like all day long happening like this, and the market doing something like this, for example, like the market did on Friday, like the market did here, the odds that we have some serious liquidation at the closing were higher, would have been higher. We have better odds of the market going, having some damage, doing some damage to the downside at the closing, especially on Friday. If we had that kind, if you had that kind of that kind of shape. You can see that. It's an indication of what kind of trading is going on. There's some nice accumulation going here. See, either buying or selling, right? Buying, selling. There's some volume, there's market keep going higher. Very, very nice, very neat here. Very neat. And you just keep adding layer after layer. Got one observation. It is part of your day, right? Part of the job. Watching that, and then you start to see what happens when something like that happens. And it's not always, some way. There is no book, right? And then there is not something that I can write and say, when I see this, I will do that. It doesn't work like that. There are some days, there are some days that are what people call, days that are by the book. You can see, you have your trade guidance, for example, you have a gap, go to the upside. Gap is not filled, it dries, it comes down and at the opening and it just dries there. It doesn't have it. Boom. In this case, the gaps to the upside, that's long, right? It's just buy the book, right? Buy the book, then it starts going higher, have upside continuation. It may take this one, next one, this one, next one, this one. It just keeps going, Everything you have learned, everything you have experienced, everything that somebody told you how to see the market, it happens, right? But those days are few, right? Really are not that don't come that often, and you notice that just after the fact. That is the thing. There's some accumulation here to the upside. That is how I started. I started to write, right? What's happening? I don't know if, let me see, this happens. For example, now what I do, the first thing, when my inventory is long. I don't do that anymore, but I used to do that. When I start doing my homework, I guess I have, where do I have that? Here? No, I guess I don't have that anymore. But if I go back in my homework, probably, no, I don't have that anymore. I start to do that, and that's how you get in sync with the market. You start to write what was happening. Okay, the market has a gap to the upside. The market didn't pay attention to the overnight inventory, which is or was 100% long. It make a second attempt here. The buy was, then you have the buying coming, really mechanical buying here coming from the lows here, and things like that, right? And with time, that becomes part of your observations, and you don't have You don't have to write those things anymore because those things get in the way, right? It becomes a distraction because now it's part of you. Part of you do is you make that part of your daily habits. And once it has become a habit, you can focus in the next thing. What is the next thing? I don't know. That's just up to you to see what's happening to value, for example. Right? And that's something that we know value moves lower. And you know, at the beginning I didn't notice value. Oh boy, I forgot to see what's happening to value. Just after the market has closed, I realized, oh, okay, market was moving lower, but prices was moving higher. And then we have a liquidation at the closing. I was just killed, right? Because I was long. And then I realized, oh, wait a minute, okay, value is lower, right? This is, you know, the long is getting riskier and riskier. We're getting close now, for example, we're getting close to these highs here, these cluster highs. Even though the observation of the weakness we have no excess at the highs, and there's a cluster of highs that we have here. And this is, we can have a spike here, and the spike can take this volume here, and make a new highs. Let's see now if there is some selling that comes from this level here. The first time the market comes back, there's some selling that's expected the first time. It doesn't happen often that the market just shoots its way through this. There's some back and forth. It's a logical place to sell here. Notice what is happening now. And now you can be long here, right at the highs, right? Waiting for a breakout here. The market has come this long, and now I wasn't long here, but I am long here because the market is going to take this high. And of course, as soon as I buy here, the market just goes in the opposite direction. Now the observation that we have here, right, that this is not a strong market, no, coming all the way down here, you know, retracing the whole range of A, it's not a sign of a strong market. That's how it dries here, right? There's some volume here, more volume comes here, more here, right? What is this? Selling, buying? Who knows? For example, today, right? Where is we have to identify first, you know, where an opportunity, when we can have an opportunity. There was one. Yeah, this is just based on odds, right? In odds, the market didn't close the gap here. You make an attempt, it didn't close it. You know, it wasn't this much. I guess it was something like this, right? Really smaller, actually, something like this. The market should is very high. That was an opportunity here. Not closing. The market just dries here and then, but we always have to monitor for upside continuation. it struggles here. Now the next opportunity is an upside market. Location here. This is your risk here, right? How much risk you have, how much the market needs to travel or move to let us know that, you know, my long is not working. It's just a couple ticks, 2 ticks here. Just 2 ticks. There are going to be like maybe 8 times that this trade will not work. 8 or 9 times, you know, but we are going to lose 2 ticks. By the time it works, we can make 5, 7, 10 points. 10 points is actually a good trade. How much you have here? 23, like 20 points here, right? But this is the stop. You know, this is it. You know, once the market takes, you know, makes this, depending how it makes. Yeah, but every day is different. Now we can make a stop. We can leave it here, or maybe move the stop to break even, and leave it there. As I say, 8 or 9 or of 10, this trade will not work. But the losing will be really small. By the time you have it right, it will be something. It will be something. But you need to keep the strategy. You need to stick to your rules. And that's something that you have to do it. You have to build your strategy, make a plan, and execute your plan. Why I go long up here, right? Why I go long up here? I am expecting the market to have a breakout. Okay, I am expecting the market to do something here. You know, I am expecting. I am assuming the market will do something. I don't know what. Nobody knows what the market is doing. I am assuming the market will take this, but the other part of trading is, you know, there is some selling that is expected here, selling that is expected here, and you know, all those highs also. The more times the market comes back to that area, the more likely is, you know, that it's going to go through. When this is going to happen, I have no idea. We have seen this behavior in the lower side, down here, you know. There was some buying here, buying the same thing. It went through here, but it didn't have downside continuation. Notice where it was bought from. You know, exactly, you know, a couple of days from monthly high, previous month high. You know, the next time I don't have good, you know, I don't have good feelings that the market is going to have. This is very, very, very weak, very questionable level here. No problem, man. It takes time. It really takes time, brother. You need to be very, very patient here. I don't know. I have never went hunting, but I have lived, you know, my childhood. I lived in this town in Peru, deep in the forest. Right, there was when I was a kid, there was times that people eat meat that you know, that you actually hunt, right? That kill, you have to kill your food, because livestock was expensive. You know, and it was easy for people to get. To hunt deer, animals like that, than to buy meat. Not for example, right? You know, this is an area here. We have another area. You know, this is mechanical trading. Okay, what? This is mechanical trading going on here. This is another potential buy here. The same thing that we have here, is the same thing that we have here. You know, buying as close as possible to this. So what is your stop? There. This is something that Jim doesn't teach. What he does is he leaves that to you. You need to figure that out. And if I tell you this, as I say, I have some questions about his teachings in this case, but at the end, I understand why he does that. I may have some disagreements, but I understand why he does that. Oh, I was saying, you need to hunt about the hunting experience. I went to hunt once with my cousin. He has his parents have a huge land. He has his shotgun. But we went to hunt birds, not deers, not that. But the first thing that she showed me is, look at this, right? And they're just as Jim says, when Jim talked about that, I can remember this experience. I was really young, and that happened. And he pointed, look at that. Those are trails, right? This animal is coming. He uses this way, this path, either to get water or whatever. I don't come back here at night or whatever. I'm going to wait for this guy to come back. And I didn't see it. What the hell are you watching? Can you see? He just pointed. He pointed his finger. I didn't see anything. And I get closer and closer and closer until I was with my face, with my eyes on the ground, and I could see some trails, right? This, the animal walking that has left a trail behind. I couldn't see it. And you have to be very patient. And just watch and keep watching. And one day you will understand what is not to fall for price. I was following price for such a long time. I didn't know what that was to begin with. I didn't know, and Jim talked about that all the time. I didn't know what he. I sent him multiple. I emailed him multiple times, trying to. I was frustrated because some things were happening, bad things were happening to me over and over. I didn't understand. I didn't understand what was happening or why. And I think the email didn't get to him. It was James that I was sure that James replied. Who knows? Maybe he read the email and told her what. And the answer was always the same. You are following price. It seems like you are following price. I said, why? I said, no, there's no way I'm doing that. And I didn't know I was doing that. But I was doing that. And it takes time. And when you go to hunt, you just sit and wait. And there are going to be days that nothing will come. And you have to be very quiet, not moving, not doing anything, just sit there and wait. And you never know when an opportunity is going to come. This may have been this one here. Once you see something, next thing, find location, or assess risk could be the next thing, and next step, find location. Okay. If I short here, if I go long here, my exit this is my stop, right? But I have less risk if I do that here. For example, this is my stop. This is my stop here. Really just closing this. As soon as this market closes this distribution, there's potential for this market to come back all the way down to here. That's it. And this is part of what is happening here now is what is this? There's two types of trade, right? There's a fast and slow he has another name for those one, anchor and develop traders, right? This would be a part of a slow trade. And what is the potential destination? Is this high here, new high. But first the market has to take this one, monitor for upside continuation, taking this one, taking this one, taking this one, and finally this one. Right? The first signs change, the first thing that can tell me that okay, there's something that's not it's not looking good here. I'll consider this maybe one. I don't have this volume is decreasing relative to Thursday. Still, this is, you know, I wouldn't give that too much value. The mechanical buying that's happening here. This is the second time. This is the second time the market is buying from a mechanical level. The laggard part of this trade right? I have, you know, this is just for me, right? I have identified a trade. What may be going on here? The market may be trying to make a new high today. The laggard part, if there's any laggard here, could be, right, a fair sign that something is getting. You know, we already have one sign, right? A couple signs already. It doesn't mean, you know, coming from here, coming from this exactly, you know, these are mechanical references. Now we have an inside bar. How much time? 40 minutes, 10 minutes into the period. We have an inside bar. Narrow range. This can possibly be a potential entry here if this closes as an inside bar. Because if I go long here, if instead of being 1041 is 1050, 57, okay, right? If I go long here, the market doesn't need to travel too much. So 36 to 33, that's 2.5. Maybe even less, okay? Because if it gets too close to this low, meaning I need only 2 ticks here, I could go long here, for example. Right? The market doesn't need to go doesn't travel too much to let me know that I am wrong. Or if this is an inside bar, you know, notice that any position I take here, the risk is not that much. In this case, if I use options, I don't like how the market is trading to begin with. All right? I don't see conviction here. Now, if I take a long, I may take some options, maybe this one. How much is this? 46. 46, that would be 45. How much is the 45? 52, 45. 52, 45 are 4 points. Right? 52, 45 are 4 points. That's 4 points. 4 points. Market coming to the directional movement to the upside. If the market doesn't take this low, or if this take this low, it can come back all the way down to here and still be good, unless this low is taken, because that means that there's change in the market. No, it's not trending higher anymore, instead it's going lower. Right? So these options, instead of being 4, maybe they will drop to 2, and that's 2 points. Right? But coming from here, just from here, is 3 points. In both cases, the risk is not that much, right? But it's less with options. Okay, and still giving. I still can be, you know, I can see the market, how the market is trading here. You know, for example, if I decide to go long, and the market comes back down to here, oh boy, that's not good for me. That wouldn't be that good. Still, it is a trending day. It's a day to the upside, but the risk will be increasing. You know, I would favor trading options instead of trading straight futures, because there's something can happen. The movement to the downside can be really fast, right? Really fast. Is inventory getting long? And what this kind of action do is remove the loans here, the loans you have here, loans here. Can just, but the thing is, it can just come back here, takes your stop out, takes a bunch of stops, bunch of people out, and it's bought somewhere in here. Can be bought somewhere in here, and then it again slowly start going high. Yeah. How much these were? They were like 4, right? Still it's a trade to the upside, but the market needs to come back all the way. The market can come back all the way down to here, 2 ticks below or above this low, this B low, and still be a market to the upside. The first sign, the second sign, the third sign actually, right? One is that it's very slow. There's mechanical buying here. So if I have a long, okay, I either hedge or thinking closing this one. $315 high. 315. No, 315 is we're way off of 315 here. Well, there's otherwise 315. There's nothing here. You know, there was a lot of volume around the center of the profile, which is, you know, back and forth here. It was a really nice trading day. I mean, a rotational day, not trading day, rotational day. And now this is a day, I would call this a day by the book, right? Very, very thin market, kind of like thin market, just in front, okay? Just in front, I wouldn't call thin actually, right? Do I think there's some positioning here for Wednesday, you know? What happened here? I guess we talk about something like the setup here, right? The setup market is preparing. There's some hedge here. And hedging that goes to the hedge to the upside. This is when they hedge to the upside, and then the next movement is hedging to the downside. Check Jim's update. He has really good information there as well. What another sources that I have is, and actually I don't read that. Just the headlines, man. Is I got Barron's, Market Watch, and the Wall Street Journal, and of course. And this thing is also, believe it or not, is important, but just these things, you know, just the highlights. If you check trading floors, they all have this this channel, but always in mute because it is a distraction. You will see something here, something interesting here, and this is TOS. Thinkorswim. They have this channel included. CNBC. Okay, is this good? I see good volume on 315 high. No, I didn't see good volume there. Volume dry there. What I saw from this day is the market didn't have it here. Closed the gap, it didn't have it this day. It wasn't strong enough to get even inside this value area, and now the overnight what they did is just shoot it way above this value area, and now we are here. Trading futures here, for example, trading futures here. You know, this is my exit, right? This is the second time the market does this, you know. First trade here, the second trade here. Now you're out. $315 is down here. Monitor for continuation. The next thing the market has to do is taking this high. Next one, this one, this one. Can you see what do you have now? You know, 1, 2, 3, 4, right? This is the time frame. The time frame you have here is daily, and this is intraday. What happens in one time frame happens in all time frames as well. These traders here are more likely, you know, are easier to be stopped out of their positions than the daily time frames. Traders. But the risk is high here. The odds are don't favor this. You know. Because there's change in the market now. Something has changed. The way how that happened, however, is something I don't like here. Alright, I have something to do. I just did one trade today when the market the market didn't pay attention to the overnight inventory, which was 100% long, very elongated. All eyes are on FOMC for me, from my point of view. All eyes. I don't know what do we have. Let's check what do we have. March 22. Let me save this. I didn't do this. Let me save this thing. This is the relevant part here. We have FOMC. This is very important. 4-month 21 bond action here. PMI 945. Got to be very careful of that. This is the weekly. Okay, something. What the heck is going on here? Look at that. 7, 5 years, 5, 2-year notes option. Let's pay attention to these options also. And here, news earnings. Is this? Yeah, this is where I have it. I didn't do this the past week. I have this just in case here. Sometimes one calendar doesn't reflect everything. FOMC is the same, there's nothing there, so it's okay. The next thing, where earnings, where's earnings whisper? Okay, what do we have for next week? Micron. This is nothing until banks start to report. I won't pay too much attention to this, but we got something here. What else can be relevant here? Nothing. There's nothing in the way here. Nothing that can give us some that can be like a catalytic that can come out. You know, we never know actually, right? We never know about that. I have to leave now. I won't do anything else today. So far, we have a trending day. It's 3 white now. The significant gap here to the upside. Gap high now. Gap high. And this will be gap close. All right. I think there is some positioning going on here. All right. Notice this area here. This one here. There's a lot of pressure to the downside, but bigger volume. The bigger volume really comes. Oh no! Look at this. Positive, positive here, positive. Now this thing is changing. Let's see if this one changes color. It becomes white. Still to the upside, but there is something that can be going on here. This is an inside bar. Let's see. All right. I hope you have a good rest of the day. See you another day, my friend. That's it.